Welcome back to this week's market preview. So quickly, we are going to run through what happened last week, and then we get into what to expect for the week. So last week, on Monday, we saw this push to the downside, and when we went to our USD baskets, we were waiting for price to come run out the low, and then give us an opportunity to buy, given the fact that we had an ATR bust the week prior. So we had a close below the weekly range, and then we are looking for counter trend trades for last week. So our primary bias for last week was to go opposite to the normal trend, which was bearish. So we are looking for buys on the USD. However, price never came back to take out a fractal low, giving us a reason to buy. So basically last week, we had no reason to engage with the markets. So we stayed out of the markets all through last week. All right, so diving into what to expect for the week, looking at swing shots, we are inconclusive, or the week opened inconclusive. So we created this fractal low, this fractal high, and you know how we do our inconclusive. Once there is an inconclusive week, we wait for the market to basically give us an inkling into the direction it wants to go. So we'll be waiting for the first fractal that will be run out, and then we'll be looking to trade opposites, right? So we'll be looking for an inducement to the wrong side of the market, and then we want to go the opposite direction. So we had this fractal low created, and then price came late on Monday to run it out, right? So price ran it out, and then today, Tuesday, and going forward into the week, we'll be expecting price to come take out this low, right? We want price to drop below this low, and then give us a reason to buy on swing shots. So once we see price drop below this low, we'll then be going down to lower time frames to look for our entry criteria to be met. All right, so that is that about the swing shot inconclusive. Now turn to a buy on the USD basket. However, if we go to fractal OF, we discover we're still bearish. All right, this was the last fractal that was broken. Last fractal swing point that was broken was this. And we've not had any up close since then. They've created this fractal high. So there's a possibility that we could just see a push to the upside. However, somehow I doubt that will happen before, except CPI gives us some other thing tomorrow, because the CPI news coming up tomorrow, Wednesday. So depending on what that reading gives us, we might actually see price go to close above this, but somehow I still find it unlikely. We might just run above it and then reject and begin to trade lower. All right, but off fractal if we are bearish. Our volume trend is equally bearish at the moment. So what we'll be expecting, we'll then be expecting price to also push up to go take out this fractal high. So this week is a case where our strategies are not unified in the entry, in the bias rather. So we are going to be looking for both opportunities to buy when price takes out this fractal low, and opportunities to sell when price takes out this fractal high. So this fractal low swing shots, we'll be looking for reasons for price to go below this fractal low, and then we'll buy from below it, and we expect price to expand to the upside. It might be a limited expansion, or we'll see a situation where price takes out this fractal high here, and then we'll be expecting an expansion to the downside. Now, usually when we have inconclusive weeks like this, we usually tend to have a kind of indecision in the market and providing us the opportunity to trade both ways. So we'll see what the market has to offer. All right. If we still look at, before we go into the intraday model, created what I call my risk on, call it the risk on kind of gauge, my own special risk on gauge, which has to do with the commodity currencies. So usually when we are in a risk on, they are usually bullish, and when we are not in a risk on, they are usually bearish, right? So see, the market turned bearish right here, and then we had this big drop to the downside, turned bullish here, we had the rallying, and if you could just go on, and then you just see it repeating itself, on bearish here, push up to the upside, down you go, and on and on. So now it has also closed to the upside. So are we to expect a rally from risk assets? Let's see. And then the opposite, which is what I describe as the risk of gauge, which is basically made up of the safe haven currencies excluding the dollar, right? So the Japanese yen and the Swiss franc. You could see we had this close to the upside, and then price just continued to rally from there. Let's see, severally broke to the upside, rallied down a little bit, came up, rallied down, then broke, and on. So usually these two used in conjunction with each other will usually give us a good idea of what is going on from a risk sentiment side of things. So we are risk on, but the risk off hasn't yet turned bearish. So that is one of the reasons why I'm also somehow expecting we might just see this come a little bit down, then push up for maybe today, tomorrow, and then break to the downside. This would have become a factor low and then break to the downside, taking the dollar with it as well. So we'll see how that plays out. But basically, looking at the dollar itself, which is the primary thing we look at, we are bullish on swing shorts, bearish on our volume trend, bearish on the weekly fractal OF or our daily fractal OF, which gives us our weekly trades. So if we look at our intraday model, we're going to be looking at EU for that. So what do we have? We have this situation where on the daily we are bullish, right? So we'll be waiting for our H4 to align with our daily to give us a reason to take a position in the market. So if we look at our H4, we'll be looking for a bullish close. However, we had this fractal high, price then close above it, this fractal high, price then close above it, and then formed a new fractal high. And then price hasn't closed. Let's confirm that. Let's confirm there was no close right there. So that high came in at 1.09395. 1.09395, and this closed at 1.09393. So there wasn't the close above, right? So we'll be waiting for a close above for H4 to align with our daily OF. However, given the fact that by the time that is happening, or in fact, even at the moment, price has already taken out previous day's high, right? Price has taken out previous days high on EU. I won't be looking for reasons to buy EU today. So all that I'll be looking for is for reasons to actually sell EU, which will align more with our swing short buyers. So whenever we have the opposing liquidity of where we want to go to already taken, then we'll basically not be looking for reasons to buy in that direction for that day until we see something else happen, maybe tomorrow. So we'll be waiting for, if price eventually closes above this fractal high, then we'll be waiting for price to come take out tomorrow's Asian low, and then we'll be looking for a continuation all the way up. So many ways to trade this week. We'll basically allow the market to dictate what we do, but we could see the opportunities to both to buy and to sell. And of course, if we are buying the USD, we want to sell both EU and GU. And if we are selling the USD, then we want to be buying EU and GU. So that is basically that for this week's market preview. On the news front, we have a ton of data releases coming out this week. Of course, the most notable being the US inflation, that is CPI, that will be released on Wednesday. But looking at it on Tuesday, we'll be having unemployment rate reports from Britain, so that will be affecting the GBP. And then we have the economic sentiment from the Eurozone. We also have PPI, which PPI for July, which would just a cheat code there will usually affect the CPI ratings or the CPI readings of August, right? So that will be the one coming out, the CPI that will come out in September. So the previous month's CPI, the previous CPI affects the previous PPI affects the next CPI. All right, so you could somehow gauge what will happen with CPI if you know what happened with PPI the previous month. All right, so moving forward, for those of you who trade NZD, there will be interest rate decision early in the morning hours of Wednesday. And then we also have in the early morning hours of Wednesday, we're also going to be having the inflation data coming in on GBP. Then GDP growth rate and employment report from the Eurozone before we then have that massive market moving event, which is the CPI from the US economy. On Thursday, most of the European countries are going to be on holidays. But of course, market releases will still continue. So we'll be having GDP data coming out from from Britain. So that'll be affecting the pound. And then later in the day, we have retail sales coming out on USD. And of course, the keenly watched jobless claims. So we'll be having both the usual jobless claims and then the 4-week average, as well as the New York Empire State Manufacturing Index. So market participants are going to be looking at these things closely because in the last FOMC, the Fed chairman, Jerome Powell, made mention of the fact that they are going to be considering the whole incoming data to make their decision on what to do with interest rates. It's not going to, no, it's no longer, they are no longer looking at just inflation data. They are going to be considering the whole economy, especially when it comes to jobs. So people will be looking to see whether there is indeed a slowing down of the economy, which seemed to have come with the last NFP report that we had. So then on Friday, to wrap it up, we'll have retail sales from Britain, and then building permits and the Michigan consumer sentiment. So it's going to be a packed week, and I think a whole lot is going to be determined by what happens with CPI on Wednesday. So you want to watch out for that. Enjoy the rest of your trading week.